Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the FOMC meeting market, and all things related to it. Big day today. We'll be talking about the market grind higher in advance of the FOMC meeting, and we'll talk about what we expect to come of it. The overwhelming expectation is a 25%. 0.25% cut. We will consider that, as well as some other ways to hedge that me and Legendary were talking about just before the show. We'll talk circle investing in Hype and launching native USDC. Oops, can you hear that? Yeah. That is ridiculous. What an interruption in my mobile setup. There we go. You should not be able to get disrupted again. HIP4 event perpetuals has also been proposed on Hype, and Hype is back to $55. So we'll talk a little bit there, and we'll be talking about the co-founder of Tether launching stable STBL that's used to spend stablecoins while still earning yield on their collateral. I somehow completely missed this, but then it ran up 500% on launch to 1.7 bill FDV in the last 24 hours. So we'll touch on what that is and why that's interesting towards the end of the show today. We've also got the latest on price action on crypto and NFTs as usual, and where we think attention is flowing. But in the meantime, I've got Legendary and Bread in the co-host seats with me. We're ready to get into it, but just a reminder before we do, nothing we say here is financial advice. This market is very, very risky, and we don't know anything for sure, especially on a day like today with the FOMC meeting, and everyone is very, very much kind of on the edge of their seats, because I don't think anyone knows 100% what is going to happen in the short term, even if they have a perspective on the long term. So exercise your own judgment. This is not financial advice. With that out of the way, Legendary, it's Wednesday. It's the 17th of September. How are you doing? How are you feeling?
GM, Jim, doing quite well. Came to me unexpectedly first as I was trying to get some water down.
Good.
Excited for today. Let's see what the market will do. I have done something that's a bit controversial. I told you before the show. I'll get to it once we get to that headline, but I think it's going to be an interesting day.
Yeah, I'm kind of interested in that conversation we're going to have, like the risk reward of betting on things which are unlikely to happen. And I guess in a more traditional sense, well, sometimes I guess people can think about it as hedging. Sometimes it's about just considering the EV of a unconsensus bet, where it's just like, okay, well, that sounds kind of too good to not put it on. So let's talk about that a little bit later when we get into it. Before we get there, Bread, how are things your side? How are you doing?
Hello. Things are good. I have resumed my role as Chief Blob Fudor. I had a strong arc in that arena. I did it last night, so now I'm having to debate that again.
A lot back in the day. This blob stuff. You've kind of been on a hiatus there.
I've been busy. I've been working. I've been trading. I've been like doing. I can't just sit there and talk about shit. And like, frankly, like I had done it for so long. So a post fired me up last night. So now I'm having a debate in my comments about why I was right, because I'm right and I'm still right.
Nice.
Yeah. But other than that, everything's good. I'm just sitting there doing. I actually just made a like I mentioned a few days ago that I had started buying some ENA. I think I'm going back on that decision right now, and I think I'm doing it because there's
the unlocks, man.
It's the unlocks.
It's the unlocks. This is the thing that I've always been reluctant. It's like, this is such a good founder, it's such a good protocol, but these unlocks.
Yeah. I think it's looking at it and seeing like price action, even though it's, generating good revenue. They just mentioned like turning on the fee switch and stuff. I was like, I was kind of excited about all that. So I'm doing some last minute diligence, but I think I'm probably going to swap most of that out for, I'm making Arrow, like go into the base farming season. Like everyone's going to be going like playing on base now that they have a token that's teased. And I'm thinking Arrow is like actually just like mispriced. If you're taking on this like whole buybacks thing, as a way to like figure out percentages. So I think I'm probably going to go there.
I don't mind it, and it also gets you base exposure as we lead into the potential world where base do an airdrop, which is probably not a potential, probably a more guarantee. One final thought on Athena bread. When some time ago, I'm almost certain they did OTC, as part of the various ways that Guy, I think, has been like trying to distribute all of these locked tokens. They definitely did OTC stuff at around 40 cents not
that's
long
the number I
ago,
keep seeing in comments and stuff. Yeah.
which at the time would have been very close to the actual price. Now, I'm not sure if you could get a seller that low. The price would need to go much lower in order to agree to that. But anything in that region would be beautiful. That would be more than a 50% discount, though. Usually with OTC, you're not going to get 50%, probably. But maybe if you did it in size, you could. I'm just putting that number out there as a, that would be very attractive. Like if you could get 40 cents, 50 cents, then you feel more comfortable even on the long run. Say there is all this overhang, maybe you can get it. You're comfortable for the long run, maybe in that respect. But that's just me thinking out loud. I like the protocol as well. But yeah, struggle to buy for the reasons expressed. Let's get into it. Got a lot to discuss today. I know a lot of people will be wondering what's going to go on with FOMC. That will be later. We'll be spending a good amount of time discussing it and our various small strategies going into it. So let's get you up to speed first, though, with the price action as usual, starting with the main majors in the cryptocurrency world. We've got Bitcoin up 1% to 116,000, grinded up quite nicely here, up 3.5% on the week. Ether's flat at 4.48. It's also up 3.6 on the week. XRP's flat at $3. Tether, reading Tether. Tether is unsurprisingly flat at $1.00. BNB is up 3% to 953. We always touch on BNB and talk about how it's just ripping. No one gives it much attention in the West. It's up 8% on the week, outperformed everyone else on the week. In terms of the majors, there's one new piece of news in the snapshot which probably relates to that. Some news that the DOJ are likely to come to some agreement with Binance that they don't need to be, they won't be surveilled as much as one of their legal agreements suggested that they would need to be. So maybe it's connection with that. It's kind of been on a rip up anyway, so I think it could be both. Solana's flat at $234. You've got Hyperliquid up almost 5% actually to almost $55. So that's pretty tasty move. And Sui is flat at $3.60. Getting into the meme coin side of things, we have Toshi on base up 60%. That's a very big move.
That was such an easy buy. And I completely ignored and missed that.
Yeah, I've been looking. So like, what else have you guys been looking at in the base? Because again, like this is all entirely because of the token rumors. They're at base camp right now, which Jesse's out there doing shit. So the things I started looking at and I noticed moving through is like Zora, Arrow, Moonwell. I didn't look at any memes because I don't do the memes thing. I feel like I'm just horrible at it, but it would have been a good play. Like I just feel like anything that was like a month or two ago, they pictured like the base app and the base stack, and they showed like an app from each layer of the stack that they were going to bring in, and that's where Arrow was, that's where Zora was, that's whatever. I think any of those are probably going to pick up activity just from like either raw farmers doing shit or like genuine activity as people try to like get some placement in the space. But like it'll be short term, I think, because it's going to. They said that we are thinking about the idea of launching a token, maybe. Right, like it's very far out based on how they're actually discussing it, which makes me think people are gonna get a little exhausted. They want to do it now, and then they're gonna go, oh well, it's gonna take 6 months, 9 months, a year, 2 years, whatever, and then they're gonna go back to normal.
Yeah, MetaMask style. That is a definite thing to keep in mind. Can I just share one data point? I hope that it is correct because I'm just taking it from the internet. Just like I've seen a lot of people saying, oh, just buy the tokens on base. We've been doing the airdrop stuff for quite some time, and I don't think that there's been a time where just holding tokens on a chain gets you like a significant amount of anything. Like, sure, you need to participate, but when I think about this, I think about much more like interacting with protocols, doing things on chain. So sure, like I don't think like holding Toshi is going to be much better. Like, sure, you can buy something on Uniswap on base, and that will count for some activity. But holding specific tokens, I don't think is going to. I saw some people. It might have been in our comments yesterday saying, "Oh, we've done a bunch on Fantasy Top, for example."
Yep.
So yeah, I think that's like
on blast. Unfortunately,
oh yeah, that was on blast. It has moved though now, hasn't it?
It has. Yeah, it migrated. I want to say about a month ago. So like the
Sure.
last few tournaments have been played there. So if you've been doing some volume, some trading, whatever, yeah, you're
Sure. So I guess that my clarification of the way I'm thinking about it would be being active on the chain or with one of its products is good. Receiving, say, Fan did an airdrop and receiving the token and just holding a ton of it, I don't think that's like going to get any specific allocation. Like using Zora, yes. If you've used Zora for a long period of time, great. If you just hold a ton of the token, I don't think that is as good. And I don't know people who've ever allocated in that specific way. Although, as you say, we never know how these things play out. Just the numbers that Legendary just brought up there, which I think is interesting to note. The point that this Aardvark was making here is that Base currently has around 260 million total unique wallets. I know very well that unique wallets is not a great indicator of anything. These numbers are not real. That's like God knows how many countries put together, allegedly all on Base. Sure, there'll be lots of wallets here that spun up that are sibling and doing various other things. But the point is the number's high. So, even just doing something now and buying some Toshi, thinking that's going to get you the airdrop, I would not suspect in my experience that would be like the best way to go about it. But curious for your guys' thoughts there.
Total side note is Aardvark's a great account. He's someone that
good. That's good.
He's a good like troll on top of like being like actually pretty insightful. He's actually so good at it that like at one point, because he's deep in the Mega ETH trenches, like he's been talking about us for a while and stuff. So I'm familiar with him, and he tricked me to the point where like it made me got mad and I unfollowed him, and then I realized it was a joke. And then I had to follow him back and like tell him about it. Like I posted it all just so he could like see it. So I was like, bro, you actually tricked me. And I actually hated you because I thought you were like a senseless like fudder or whatever. And then I found out he was just trolling me. And then like I had to respect the game. And then I had to follow him back because I respected the game. Yeah.
I've always thought he was very sensible. I've just followed him back because of that story actually. But every time I've seen his stuff, he's been sensible. As well. That's funny. Curious for your just quick take there on Base and participation and things of that nature.
A man can't drink in peace on the show today. Got me the second.
What do you need a drink for? You're just sitting there the whole time, not saying anything.
Need to stay hydrated. I think that the time frame is the thing. I do think that they're gonna do a token. These explorations, you wouldn't say something that and then
of course they're gonna. They were always gonna do a token.
Exactly. But I don't think it's something that we're going to see in the immediate future. So the plays that I've been looking at are also more short-term, to be honest. Yesterday I said on the show that Vader did that pivot to robotics. Again, I didn't read into that. I was like, maybe virtuals will do well now for a bit because it's something to do that people remember on Base. And robotics is a thing. I did buy that token. I traded out of it today because I just didn't have the chance to read if it's actually of substance. So I will get into reading about that more and see if that's worth a hold. Some other robotic stuff on virtuals as well as I'm holding. Apart from that, I did the thing that I said yesterday, which was
virtuals is a good call out.
Moving my stables from Aave mainnet to Aave on Base.
Perfect. I think that's like a really sensible thing to do.
And increased my stable exposure that I had on Moonwell Finance as well, which offers very similar rates. So that's more for the long term, but I also had a couple short-term trades on. But for some reason, clearly forgot about Toshi, which was, again, such an easy trade to make.
I would be more forgiving. I don't know how easy that trade is necessarily for the reasons I expressed, but I think the sensible, I always want to be lazy, allocating to these lending things on Base instead of mainnet. Excellent, sensible move that you can like just forget about. Brad, final take before we do the rest. Did you want to come in there?
Honestly, another reminder, like the Toshi stuff, why it was such a layup is like Toshi has been very integrated with a lot of like the Base shit. Like they just got listed on Coinbase, I want to say. They got highlighted by the app. Like there's a lot of like formal, it's very like it's very like hello fellow kids meme coin for sure, but it's like aligned with the base cabal. So like for it to pop makes a lot of sense to me. So I think it was actually pretty easy if you've been like seeing some of the stuff that they've been doing, and fairly safe. Yeah, like I there's a lot of stuff that you guys went through that I'm having a hard time recalling right now, but it was mostly just like, yes, this thing was always going to have a token. That's what it was. The question now that everyone is asking is, they say network token. They talk about decentralizing their chain. They talk about all that stuff. So, but then they quickly followed the slide up with like, we're still aligned with Ethereum on the announcement. So the big debate of everyone in the nerd sphere is like, is this the early signs of them going off to be their own L1 chain? I still think no. Because it like frankly benefits them to not do that. And I think the L1 premium is going to continue to erode. I think it is frankly not something that is deserves a premium, if I'm going to be honest. And yeah, so like that's the next other debate that's going on. That's outside of just like, okay, let's farm this bitch. It's okay. Like, what does this mean for Ethereum?
Good question. I lean in your direction there. Say again.
Is it ETH specific? Because like there's the whole Ethereum versus ETH. Like there's like the network. What does it mean for the network? What does it mean for the token? We're always interested in what happens with the token.
Yeah, interesting. Yeah, we will keep an eye on that.
Also, quick shout out to us in the YouTube comments saying Ethos is on base as well, which
oh yeah,
I completely forgot. And I have 7.5 ETH in vouchers there doing their thing, so that's not bad.
Friendtech was also very basey. That for all of us that I did a lot of volume there, except that wallet is compromised for me, so not great.
There'll be a lot of apps that we've played around with that will just will just be fortunately on base kind of without our thinking. So I think that'll be nice. Let's keep an eye. We will keep an eye out on that. As I said, nothing imminent, I don't think. Getting you up to speed on the meme coin side of things. We have Doge, which is flat. Everything's really waiting today. As maybe very similar to yesterday, actually. Pepe's flat. Pengu's flat. Pump is down 1%, but more or less at about 8 bill FDV. Trump's flat. SPX is up 1%. Fartcoin is up 1%. Rect is down 2%. Brett is down 2.2% on base. Toshi is the one that really exploded up. That's the only really one to kind of write home about. Getting into the headlines themselves, obviously one of the main reasons why things are just waiting is because of the meeting today. So the market's been grinding higher in advance of the FOMC meeting today. Overwhelming expectation is the 0.25% cut incoming. Legendary is going to break that down in a bit, and we'll talk about different alternative little bets that we've placed. Circle invests in Hype and launches native USDC. That was big news yesterday. And Hype is back to $55. Maybe whether to do with the news or just in general bullishness around that ecosystem. We'll touch on that as well. And then co-founder of Tether launches STBL. It lets users spend stablecoins while still earning yield on their collateral. Stable ran up 500% yesterday if you bought it when it opened. To a 1.7 bill FDV. Some notable price action. BNB is also just keeps pushing towards, to new all-time highs over and over again. And we've mentioned the others. Ledge, is there anything we need to know on the NFT side?
Such a fantastic move for BNB. I think we're going to see 4 digits BNB this cycle.
I think so, yeah.
Yeah, pretty soon. I did
the quick math on Mantle, by the way. Like we guys talking about BNB there, and like, okay, is it like, yeah, it's not enticing for me. It's already getting pretty expensive, and like I just don't want to like position myself in something that I'm unfamiliar with, just hoping that it becomes a BNB of something else. So FYI, I saw it. It looks cool, but it's still pretty.
And just for context, Brad, Mantle is
an L2 that is created and run by the Bybit Treasury, which is one of the popular DEXs or centralized exchanges. Looking at like the volume, like I compared it against like what else is out there. Like how does Bybit stack up to Binance, like on fee generation, all that shit. To like, okay, because that's what they're doing. Bybit is starting to integrate the MNT token from the actual L2 as like a fee reduction mechanism, as like a utility within the actual centralized exchange. So it's like you think it's going to take the same trajectory as Binance did, where like, oh yeah, BNB, you get into Binance Launch Pool, you get discounts on Binance Perps, you get like all these things. But then BNB as a chain also has decent volume, mostly from like shitcoining and stuff, but like it has decent volume. Whereas Mantle has 0.0 volume, has a big treasury, and then Bybit has lower volumes and lower fees, lower everything than Binance. So like just seeing those two things and the current price that it is, it probably can keep going up, but I just like I don't want to position myself into something like that. That is just like I'm so far removed from. So
yeah. Okay. Yep. Makes sense. As you said, it's already put a huge move in. Just getting into the rest of the roundup here. Oh, Ledge, did you do the NFTs? No.
No, I didn't. Let's do them quickly. We have Pudgy Penguins being up 2%, 10.3 ETH floor for them. We have Bored Apes being up 0.6%, holding barely above 9 ETH, 9.1 ETH. Moonbirds are down a touch, Azuki's are down a touch. That is all over the last 24 hours. However, just zooming a bit out over the last week, we have Doodles, Azuki, and Moonbirds being down between 8 and 15%, and Pudgies as well as Apes basically holding up pretty stable.
Good stuff. Good stuff. Let's hit the rest of the roundup to get you up to speed, and then we've got the big conversation coming up. So let's rattle through this. Binance close to removing DOJ external compliance monitoring. BNB has then moved to an all-time high on that news. Google teams up with Coinbase to bring stablecoin payments to AI apps. Bitwise files for stablecoin tokenization ETF. That was an interesting title for the ETF. UK and US announce a closer crypto cooperation with focus on stablecoins, according to the Financial Times. Movement Labs announces pivot to become a standalone L1. It's now trading at 1.2 bill FDV. Sharpen Gaming buys another 1 million of its shares back and will continue if its NAV dips below 1. Plasma Syrup USDT vault filled up fast yesterday with $200 million because it was the last vault which they opened, which has XPL rewards, which acts as part of the yield in terms of your USD deposit. And in some other news, Jack Butcher Gas Wall mint is today at 12 p.m. Eastern time. That has a very interesting mechanic. Virtuals announces it will fuel the next wave of robotics agents. They're going after the robotics meta, I guess. OpenSea reveals more than one season for final pre-TGE phase of rewards. So it doesn't look like that token generation event will be in the next couple of weeks. It will be later in Q4, it seems. And then finally, Wormhole teases an announcement for today. Maybe that might be a second airdrop for Wormhole. I'm not 100% sure. The first one was very, very good. Let's see what comes out. But that is the roundup to get you up to speed. We've got a lot of stuff to talk about today, but just curious, Ledge, before we get into it, is there anything catching your attention there from the rest of the roundup that you'd like to call out?
No, but there's something else I want to touch on, and it builds on the thing that you said yesterday about Robinhood doing this public fund for privately traded companies. We also spoke about Robinhood entering the prediction markets game, and I saw this post on the timeline. Let's bring it up. There we go. Someone basically doing a bit around the rate cuts. It's not the important bit. The important bit is that they put in a 1.8K bet, and they have $600 of estimated commissions and fees. And I was thinking, this is absurdly expensive compared to putting that bet in on Kalshi, on Polymarket, especially for the rate cut side of things, where you can also do that with significant size. Not that 1.8K is a lot of size, but where you could do that with way bigger amounts. And if this, I don't know the exact details of that, but if this is the fee and pricing model, they will print on the prediction market side, and they will probably make a ton of money with that public fund.
Where was that?
Traded companies.
What product was that?
The prediction markets.
That's like that. That's the name of it.
I don't know how they call the product. It's just the prediction market that Robinhood offers.
Okay, because I'm pretty sure they're on top of Kalshi. So I guess maybe they're just doing like a front end fee there.
That is absurdly expensive, though, isn't it? To charge.
Yeah,
like,
I mean, yes, yeah, we could run it like crypto runs that to zero, right? Like Polymarket and yeah, I guess maybe Kalshi directly. But if that is from within Robinhood, my understanding is that most, if not all, markets inside of Robinhood are actually done funneling to Kalshi on the back end. So that's basically just like Uniswap Labs running a front end fee on their actual Uniswap.io, whatever front end. And even though the contracts on the back end are 0 fee or whatever,
Interesting.
which is hilarious, given it's just it's just clicking electric buttons. Yeah.
Yeah, it's hard to justify these fees when it's like, okay, in the smart contract, which we wrote 4 years ago, and it's all fine, but we're still going to have all these fees. I guess smart contracts need upgrading, and there are different versions of things. Even something like Aave, which is like a rock solid protocols coming out with V4, you know. So there's a lot
actually,
of
no, they don't. That's the thing. Like that's so like that's why like the justification there for like Uniswap, right? The contract that Uniswap wrote is immutable. It's on chain. They literally could not change it if they wanted to, right? It's out there for forever, has whatever fee it is. And they are saying the fee is deserved for running the infrastructure of the front end, the website, like all of that. So upkeeping the maintenance and changing the UI and the engineers to do it and the DevOps, all that shit. It's like that is the justification for the fee, which is why there was an arc back in the day where people said like, oh, actually take your website and deploy it to IPFS or Arweave or whatever these decentralized storage solutions are, because then the website actually exists on something that is forever up and accessible to anyone and whatever. And then there is no maintenance to that either. So then both components are totally up and free and blah. But it also comes with annoyances to do that. So they run the front end, they get the distribution. It's more of a distribution fee, I would guess, than like anything else. It's like we're using our brand, we're using our familiarity, we're leveraging the book thousands and thousands of bookmarks on our site, and we're charging a fee for that.
I actually don't mind it.
Forecast X. Okay, there's a second one.
I think people should make money in the space.
Yeah, I'm not pushing against it. Yeah. It's just the like your margin is my opportunity, right?
It should be.
Jeff Bezos.
It absolutely should be. So that should motivate people to think that they can take it, and then go ahead and take it if you think you can. I like it. Like the competition. Look, we've got a lot of important stuff today. The big stuff is the FOMC meeting. So let's get right into it. Legendary. What do we need to know here? What are the expectations? What are maybe the secondary or third things that might happen, or any consequential ideas that you have, and have you taken any action on it? Fill us in.
Absolutely. Let's get into it. Situation is the very same as yesterday. We still expect a 25 pips rate cut with an overwhelming majority. If you look at the markets on Polymarket, that's more than 90%, 91% betting on that. 7% thinking we're going to see a 50 pips rate cut. 2% thinking that there's not going to be any change at all. We also had this post by Alex Kruger saying that he's ready for a dovish rate cut tomorrow, despite a lot of that already being priced in by rates markets, write-ups coming up on the FOMC and the economy. So his market views haven't changed much. He's bullish on equities and Bitcoin, and the market often forgets how much BTC can move due to recency bias. Generally, I would argue that the sentiment on the timeline is a very bullish one, with that often quoted statement or statistic that if rate cuts happen within 1% of all-time high, then the market typically turns up another 15% over the next 12 months. So that sentiment is, as I said, a bullish one in terms of what the actual markets are doing. Let's bring up the S&P 500 chart, which basically tells everything that you need to know. It's up 1.5% over the last 5 days. We had 4 days, so yesterday and the 3 days market days before that, where it hit a new all-time high every single day. And basically yesterday we've been flatlining and just waiting for the FOMC decision to happen today to see where the market is going to take it from here. And then to finally answer your last question, which was, did I take any action on that? I did, more as a hedge in my portfolio, and just because I like the risk reward, I went on Polymarket and put in 2 rather small bets of 1K each, one of which betting on no rate cuts, which would be a 40x. So if that hits, that would be $40,000. And the other one doing the complete opposite, betting on that 7% chance to see a 50 pips rate cut today, which then would turn 1K into, I think, 11.5, 11.8K. Not because I think that this is necessarily what we're going to see, but I feel like especially the no rate cuts bet, if for whatever reason that were to happen, could act as a nice hedge in my portfolio, because that would not be a good look for the market. So it's not necessarily that I think either of those two things are happening, but I just view them as a nice hedge with a potentially quite lucrative upside.
Okay, Brad, you get to decide which of these hedges is the better hedge. So you heard Legendary's hedge, which is betting on the two outcomes that are least expected with fairly big upside. What I decided to do yesterday with ETH at around 4.5K is open a short on Ethereum. 3x short, get liquidated at 5,800. I feel like even if we cut and we get the expected cut, we might move down because it's so heavily forecasted, at least in the short term, and then we kind of resume going up. If we do not get the cut, as Legendary said, I think we tank down briefly. And then in the scenario where we get a surprise bigger cut, then I've missed and we go up. So in my mind, in 2 out of the 3 scenarios, we might move down. Against the backdrop of there being against the backdrop of like DATs getting exhausted, specifically with ETH, MNAVs getting compressed, I feel like that's the weaker one at the moment. And so on the flip side, I'm thinking, okay, well, if ETH goes to 5,800, liquidate me. I don't mind. Everything else would have gone in my portfolio up so much. I don't mind at all. So this is my small hedge, playing around with hedging. I've never hedged before in my life. So that was my thinking. What do you like?
So I'm going to throw up another option, which you guys would know these rates better than me. What are the current LTVs on an ETH loan?
What kind of loan?
On an ETH loan.
Check on Aave what the borrow rate is.
Borrow against ETH?
Yeah, to borrow against ETH. Could you
like? That's not what I want to should.
If the LTV is high enough, right, that effectively caps your downside if you were able to do that. It's something I want to do with NFTs, where it's like if I'm coming into a moment where I'm unsure which way it's going to go, take a loan against all my NFTs for a couple of days, and then that caps my downside, right? If I get $1,000 for a $1,200 NFT, that's what, 15%, sure. And then I just don't pay it back and I hold on to the dollars,
sure.
Or I pay it back because it's moving in my favor, and I took on basically no interest in the time. So if the actual LTV is pretty high on some of these ETH loans, maybe I go with that. But I think just because I'm starting to actually like doing a lot of perp shit, I think I like BCheques more, just because it's more fun to do that right now. Although I was going to look for AI Rev. I don't know if you cited him, Legendary, in the ticket, but he also bought he bought a $5,000 of the rate ticket to win $102,000. So like he did the same thing. He just bought a YOLO ticket. He's like, if it goes down, if it catches everyone offside, like I'm gonna win a little bit, knowing it's probably gonna be lit on fire. But
to be fair, like
it just would do nice on the timeline to have that.
But also, to be fair, like it's not. I don't think this presidency so far has been very smooth. Like there have been multiple times where people come out and just do or say things that are not expected. Like if you just cast your mind back a few weeks ago to the Jackson Hole event, like it completely caught people off that he was going to be so dovish, that Powell was going to be communicating in that way. People were not expecting that. That's why we saw the rapid thing up. And I feel like there's a number of examples, if you go back to tariffs and just the general style of communication across the board. Like, I think the reason why obviously I like what I did, but the reason why I was kind of intrigued by what Legendary did as well was because it's like, I think if there was a time where you wanted to bet on when that very unexpected bet is more in play than in other times, I think it's probably now, where, you know, if you told me in the end that Powell came out, say we fast forward a week, if you told me that Powell came out and just justified no cuts based on fear of inflation coming back and not wanting to do it too fast, I would probably tell you next week, like, yeah, fair enough, that sounds like something he might say. Like I don't think it's, and maybe the prediction markets are so good that 96% is basically because it's nailed on and someone's got information and it is purely accurate. So I'm open to that. But all I'm saying is I like the risk reward even of that alternative scenario.
Yeah.
So it's kind of like it. Any final thoughts here?
Yes.
Maybe we'll
To
go on.
answer Brett's question, I can't open Aave right now because of my VPN, but I can tell you the borrow rate on Moonwell, since we spoke about Moonwell today either way. And that is excluding the well rewards base borrow rate is 1.2% to borrow against your ETH.
Well, no, what's the LTV? Because the LTV is the downside, right?
85 mil, if that's enough for you. Oh, you mean,
No.
sorry, value was TVL in my mind. Probably
yeah.
65%, something
Yeah,
like that,
that
70%.
sucks. That's a
Yeah.
huge
It's not
jump.
high
Like, that's catastrophic levels. So okay, so that's a bad move. So I'm sticking with my original answer, which is the perp short, because it's fun.
Perps are fun. That's what we've concluded.
Do you see my tweet? I did a tweet that was like 2 days ago, where it's like me then. It was like, guys, all the traders say don't use leverage, so I'm staying away from it. Thank you. And then literally yesterday, 2 days ago, I was scrambling for a platform that had this one asset listed, and it was like the 75th perps platform on like the 19th chain, and it was the only one that had this asset that I wanted to short. And I was like, I was jumping through all these fucking hoops to try to go and sign up. I clicked a lot of buttons that I probably shouldn't have clicked, and in the end, like it was just so janky, I couldn't even take on the position. I was trying to like approve the USDC so that I could actually put on the short, and I just eventually gave up because it was too janky. And then of course it was a trade that would have hit. I think now, like looking now, I think it was down like 40 something %. So like I would have won, but c'est la vie.
It's fun. What can you say? It's fun. Perps are fun. Okay, one question there before we move away from FOMC, because that's the biggest thing today, is right. We kind of explained. I explained maybe a bit of the longer thinking. Legendary, what do you think actually plays out here? Or if you want to like not role play the scenarios, what's the word? Like, I'm not going to ask you to pretend like you're Powell and just do various announcements. But what are the various scenarios in your mind and that could play out, and what do you think happens practically?
I hate to say that I have absolutely no idea. I think
Okay.
I expect a ton of volatility that could go both ways, and I feel that Wizard of Soho had actually a very good post on that, which was to say, FOMC tomorrow, why would I do anything with massive or any leverage before? Because we could go either way. We've seen the stock market trending up. We've seen Bitcoin trending up on the weekend, but correcting, now being back up a little. I have no idea where we're going to go today. And I mean, scenarios are we go up, we go down, we go sideways, and all of them could happen today. And I have no indication. So this is why I actually thought this was a very thoughtful thing to not touch anything with leverage on a day like today.
Fair enough. I think that's fair. If you cast your mind back to Jackson Hole again, like the move up from there, I think ETH was at 4.1 or 4.2K, and it just went up in a straight line to 4.7 or something like that.
Yeah.
When they did something unexpected. And my bet would be, if I had to bet, is that if the expected thing, I don't think is going to have that outcome. That's just my take. I don't know for sure. We don't know how these things play out. If the expected thing happens, I don't think that would be the outcome. It would need to be a 0.5% cut for something like that to happen, because that would be unexpected. So that's how I would be thinking about it. And equally, I think it is so unexpected that for things not to change, that that we'd go down if it wasn't the expected thing. So that would be my instinct. I still think we're in this kind of broader cutting cycle, or we're going to get there sooner rather than later, unless anything, unless inflation gets too difficult. And so yeah, that's kind of broadly how I'm looking at it. I kind of like the little short that I opened, just because I'm very happy to get liquidated at 5,800 if that's when, if that's the price that will happen at. So, okay. Final question on this. You mentioned an interesting statistic, Ledge, that if something about going into an easing cycle, the price goes up. Going into an expected rate cut, price goes up. God, what was the percentage? It's like some crazy amount of times.
Cutting within 1% of all-time high, that when starting a rate cut cycle, equity returns as measured by the S&P 500 index averaged 14.1% over the next 12 months.
Okay. So I saw that statistic as well. That was quite meaningful, I thought. One that I wasn't aware of. I saw this other statistic. Would be curious for your thoughts on.
That held, by the way, true for, that's measured since 1980 over 11 rate cut cycles. That was the average return once a rate cut cycle got started, basically.
Okay. That's good. I've just shared one of the other statistics that I wanted to, I just put it in the private chat. Maybe if you could pull that one up. This statistic that most investors have zero allocation to crypto, according to Bank of America. This was shared yesterday. It said Bank of America's September survey shows 67% of fund managers hold no crypto. Only fractions allocate. The average allocation is just 0.4%. Overall, 84% haven't started structural crypto investments. The reason why I bring this up at this stage is because we've been talking a lot about how DATs have basically become the main buying vehicle. Sure, there's institutions as well, but it's these treasury companies which have been doing the vast majority of the buying and responsible for the price action. And one of my specific concerns more recently has been like, you've always got to ask yourself the question, who's the buyer? Who's the next buyer of these assets? If it looks like the DATs are getting exhausted, then who is going to come in to buy? I think the Ethereum ones are getting a bit exhausted. The MNAVs have compressed significantly. Some of them are choosing to buy back shares instead of buy back the asset themselves. Strategies, obviously, it's kind of in its own different game, although they've made some adjustments. And Sol is hot at the moment. They've just raised all that capital, so I feel like that buying can continue. So I'm just wondering, does it? My query, the query that I have for you both is, well, this is the way I'm thinking about it. We've been speaking a little about it, Ledge, how all these assets are just converging, right? And sure, Bitcoin seems to be lagging a little bit at the moment. There seems to be incredible appetite to just pile into stocks, pile into gold. And I'm not necessarily certain that piling into crypto just because just because it's under-owned, for example, will give you as good return as piling into Robinhood. Robinhood has been one of the best performing stocks in the last year or so, and I'm pretty certain has outperformed like Bitcoin or ETH, and even from the lows. So there just seems to be huge opportunity in the traditional market as well, which is my question. It's like, do people need to go into crypto if you're going to get this clean multiple in the normal market? Brett, I know, maybe I'll come to Legendary first, and then Brett, I know you're in Robinhood, or you're a big proponent for Robinhood, so I'd be curious for your thoughts as well. Legendary first.
Yeah, Robinhood's up 215% year to date. I feel like that's all a question of what you generally want to do with your portfolio and where you are portfolio size wise. If you're sitting on a nice portfolio and you're happy to capture whatever BTC upside there's going to be over the next years, it's absolutely a good thing to do, and probably offers a nice risk reward ratio. Whereas with Robinhood, you could have made the argument to bet on Robinhood, on Circle, on Coinbase, on many crypto adjacent companies, and SBET, what Tom Lee's Bitmine or whatever looks interesting to you. And some of these bets might be winning ones, and some of these bets definitely became losing ones at some point. So if you want to take excess risk and like kickstart a smaller portfolio, definitely other opportunities to look at outside of buying Bitcoin, which makes a ton of sense. think someone posted it yesterday at the time. I don't remember when it was and went viral with that. Posted a screenshot from a Reddit post that had someone's crypto portfolio with AVAX and Ripple and some other things, and they're like 3-4K each. And the question was, will I make generational wealth with that in 10 years, or whatever? And basically, the comment there was, look, if you have 20K or so, buying tokens of that size won't make you generational wealth just by holding them. So yes, there's definitely interesting opportunities, and I very much like to hold my BTC, but I also very much like to look at stuff that's further down the risk curve. And I said it yesterday, I want to have even more exposure on the stock market. And that has been and still is the biggest change of heart that I had this year, because typically I was the very boring stock guy, right? I was just buying my S&P 500, my MSCI World, and happy to hold the index, because I was saying I'm already taking so much risk on the crypto side of things. And the change of heart was to say, if I have above average knowledge in any field, then it would be the crypto adjacent stocks. So it actually would make sense for me to put that bet on. So I obviously still hold my my indices. I was more than happy to also put bets on crypto adjacent single stock picks this year as well.
Okay. I like that perspective. Brad, what do you think?
I actually just put in like a market buy for Hood last night for I've shifted basically everything from my coin positions outside of a small spot bag plus some options that I've had cooking for over a year, and those expire at the end of the year, so those will be done here soon. Yeah, so I shared this with you. So one, I've diversified and shifted my weighting from coin and Hood slowly from basically 100% coin to like 70-30 Hood at this point. And I just see so many things coming together for the platform. They're just like, it reminds me very much of like the Solana Ethereum game, right? It was like Hood feels like they're more agile. They are faster at iterating. They are more consumer focused. They're doing all this stuff. Whereas Coinbase is very institutional. Like that's the bull case with basically everything. So between Circle getting like curb stomped by a bunch of stablecoin providers these days, which is like a bull case for coin, them being institutional, and then Hood being very consumer focused and constantly iterating and applying to everything, whether it's now they have the social thing coming. I have like a pro Robinhood trading experience inside the app. They have prediction markets. They have like they're launching their own chain. Like they're doing all this shit, right? They're being very agile with it.
So I guess so that's definitely the bull case, Brad. But do you think this will mean that future potential buyers of crypto will not bother? That's the specific thing I'm thinking. Like, who are the next buyers?
With Hood?
Do people get the exposure to a gambling risk-on world by just buying either Hood or, frankly, if Elon's going to buy $1 billion, I can't remember even the number, some crazy number of his own stock, like. Can you get the same risk reward from buying just these risk on shares? And will people bother?
I would argue that was never really a factor in the last couple of years because of the proliferation of options. Like options can be applied to any large cap stock, right? And that is the risk profile that people are trying to go for. They're just a little more complicated. So like I could buy options on gold, and gold is a very slow moving thing, but it can up my actual exposure and the risk that I'm seeking without having to expose myself to these like edge of or end of curve risk assets, right? So I would argue that like that stuff was always eroding anyways. And coin, yes, was like the index play on crypto. I don't think that it is, it's not hard funneled through that anymore because of everything else. Like I can literally just buy options on an ETF, right, on Ethereum. So like I can do it very directly from my portfolios. So no, but like I do think it will grow because of it, because it's leaning into it, and because there is a lot of stuff that are still coming through crypto. Like, again, prediction markets is something that's very popular. The equities trading 24/7, like a lot of those things that we believe are enabled by the technology, like Robinhood will lead into it, and maybe it becomes a suite in which you either do the crypto stuff or you don't do the crypto stuff and you continue to do the option stuff. Hood to me is like a gambler's play as opposed to like a crypto specific play. It's just like a consumer degeneracy long-term play.
Okay. I like it. good to get that thinking out. I want to get into the circle stuff. My final reflection here is I would just definitely be aware that this stuff goes in two directions, and everyone so happy that everyone else is getting exposure to crypto. Yes, that is true, but everything else is coming on chain. And if you have people like myself and Legendary and Brad saying, oh, but all of this capital that we would ordinarily have put into some crypto adjacent stock or into crypto, we're now going to go on Solana and buy X stocks because that's now on chain, and we can do that in a really smooth, easy way. And we want to actually allocate more to the normal market. So this thing goes two ways, basically, is my point. Because all of that other stuff is coming on chain too.
But we still have to acknowledge that, like, the reason I'm doing all this stuff off chain is because I literally can't pull it on chain without a severe tax burden, right? So like,
Sure.
there's an amount of capital that cannot come on chain and will not come on chain. So therefore, it is constrained to the vehicles that it is able to have access to from like where it sits, right? So like my IRA, I can buy ETH and I can buy Bitcoin and maybe Solana now. That's it. So like I have to buy Hood if I want crypto exposure. I have to buy ETH or Bitcoin if I want crypto exposure with that money. Like otherwise it has to play equities or commodities or whatever. So like that will always be the case. And that will like that the size of that capital is gargantuan. So
fair. Okay. Let's get into it. We're running late today. We have to do the circle investing in hype news. So what is the main headline here, Brad? What do people need to know? Hype is back to $55. So what do we need to know here?
Yeah, so Jeremy Allaire came out and announced the launch of a native USDC and CCTP v2 on Hyperliquid's Hyper EVM blockchain. And with that, it means that you can do like instant mint and burn natively on Hyper EVM. And then they talked about they are also doing they've acquired Hyperliquid's Hype token, like a strategic investment, one might say, and are trying to position themselves as a validator potentially. So like they're just like getting more deeply ingrained after losing or not losing. They didn't even put in a bid for the USDH ticker. They're trying to just like make sure that they're there. Obviously, this is a way to strengthen the bond of the ecosystem so that maybe people don't dump all of the USDC, roughly 5 billion or like 7% of Circle's circulating supply that resides on Hyperliquid. That's a lot of money. It's like $200-something million a year, roughly, if you just take like the normal interest. Yeah, it's interesting. I ultimately think like given the attitude of the ecosystem, that does not matter. Like they're going to like position themselves closer to USDH because it's something that is aligned. Yeah, of course. Yeah, like why would any user who's in there is gonna like continue to do that because it means more hype burn? Like that's what they're gonna do. Because if it's
I'd love to know the breakdown
0
of holders on hype. It's probably gonna. I mean, I'm gonna be dramatic here, but it's probably gonna end up like 70 people own 90% of the USDC on hype. It's definitely like a whale platform, and so all of those people are just gonna be so Hyperliquid aligned. They're gonna switch it as soon as it's live, isn't it?
Yeah, but yeah, potentially. You had a few other articles that were people commenting on Hyperliquid developments, and this is if I've seemed a little distracted this morning, it's because I'm fighting for my life in my comments because I fudded HIP4 yesterday. And
okay, this is good. So first, tell us what HIP4 is, just as a idea, concept, whatever's been written and proposed, and then you can say why you've made people angry.
As I do. So so we'll start with HIPs, HIP, Hyperliquid Improvement Proposals. HIP3 is something everyone has probably heard before, where it's like teams can come forward and they can list their own perps market and collect fees on it. So like I can come forward if I have 1 million hype, which is a shit ton of money. I can stake that. I can then find the Oracle and I can create a market for a ticker that I assigned. Let's say it's Hood. Right, I buy the Hood ticker and I list a perp market for Hood, and I collect fees on the Hood perpetual, which is supposed to be a perpetual associated to the Hood Robinhood stock. Okay, and I can collect fees on it. That's what HIP3 was, and that's what everyone's getting excited about. HIP4 is something that was put forward, and it's basically a similar process where you get 1 million hype. You stake the hype, you create a market, and then you create event perpetuals is what they're calling, which doesn't really make sense given like they rip out all of the actual mechanics of a perpetual because it's a binary thing. It's just meant to simulate a prediction market market, a binary outcome thing, yes or no. And they put a proposal forward with it. So like the thought is I could come forward, I could stake the Hyperliquid, and then I can create a market around an event, whether it's rate cuts or whatever. So that's that, right? That's all it is. The thing that I pushed back on and that people are getting all butthurt about right now is that I said, guys, both of these things, if they require you to get 1 million hype, which is a shit ton of money right now, what is that, $5 million? If you get, or $50 million, whatever the fuck that is.
55
Yeah.
million.
If it requires me to source that, even if it's not mine, right? Kinetic is helping people do that with K-Hype. They can source it and create the stuff. It does not matter. The thing that matters is you think about the threshold it takes for these things to actually get to market. So it's sourcing the liquidity, it's creating the oracle, it's doing the thing. It all takes time. So if everything that comes through these vehicles, whether it's a prediction market, whether it's a perp, takes time, days, weeks, hours, months, whatever the fuck it is for someone to do it. For someone like you and I, it would take days to weeks, maybe months to do something like this, right? Think about the time it takes to do that. And when you think about the broad market trends, which is everything is compressing on time, everything needs to be faster, everything needs to be more instant. Look at Pump Fun. Pump Fun is the evolution of the meme coin dev launch from 2021. Back in the day, if you wanted to launch a meme coin, you said, okay, I'll find a dev. Okay, I'll source the liquidity. Okay, I'll create the Telegram group. Okay, I'll do the thing. It took hours, days, weeks, months to do this thing. And it is now compressed to someone logging on to Pump Fun and clicking stream. You click a button, it launches a coin, does the liquidity pool, bomb, done, right? Everything is compressing. So my pushback was like, guys, I think these things are net good for the platform. It expands the surface area of what it can apply to. Awesome. If you think this is going to be competitive with all of these other, like Poly Market is already getting flooded because it does not list all the markets everyone wants. Everyone is trying to say permissionless markets. Everyone should be able to list their own market, create their own thing, do this thing, iterate faster, faster, faster. And if the counter to this on the Hyperliquid side is just that, like, oh, don't worry, we'll have one market every 5 days. Like, bro, that's not going to cut it, right? It's like looking at market trends. So like that was my observation, just to say, pump the brakes a little bit. And everyone else is like, now, like, you're an idiot. Like Hyperliquid's going to be the house of all finance. Literally everything is going to reside on Hyperliquid. It doesn't make any sense.
Okay, I take the point. I think one of the things, so that's a helpful summary. You mentioned HIP 3, which I think has been better. I'm just trying to get some of the other interesting information that's come out subsequent to that. You mentioned HIP 3, which people had been a bit more positive response to. Jeff actually responded to HIP 4 in the Discord. This was just like a couple of hours ago, I think. Said, thanks for the thoughtful proposal. I think this makes a lot of sense. Agree that perps don't need to be in the name unless there's funding. It feels technically similar to HIP 1 and HIP 2. The implementation is conceptually simple, but reusing the existing core logic is still a decent amount of engineering work. And I guess you're just asking a few questions about whether or not it would be even questioning, like, is there a way for you to estimate the demand for the feature? Because this is obviously thinking about predictions and stuff. So that's one point. In terms of the others, might be running out of time, to be honest, but I think one of the Hyperliquid pushbacks would be that in general, the chain is very kind of, maybe this is one of the pushbacks you saw, Brad, which is that in general, the chain is very permissionless, go and do whatever you want. The team generally don't pick winners. I think that's one of the things.
The EVM is different.
Yes, but then, so I guess the way to launch with any of these things is you need that hype to launch.
If you want to cross the bridge into Hypercore, which is the application that is fast and fun and user friendly and cheap and all the things that everyone enjoys, you have to go through this process. If you want to launch this thing on Hyper EVM, now you're creating a consumer experience that is deployed on Ethereum mainnet from 2019.
Sure.
Which is not a good experience.
One other interesting thing that I put in the chat was this point. I don't think it's necessarily even relevant to this specific point, although you can maybe see how these things will play out in future. I don't know if that's the right screen being shared. Luke sharing the idea. I don't know if this is only possible in Hyperliquid, but the publicly traded company Hype D. This is your guys.
Yeah, this is mine. Yeah.
At Hype D just rented out 100,000 staked Hype to a trading firm to give them substantial trading fee discounts. I wonder whether what will happen, Brad. This is like me trying to use some imagination. Is people who don't have all of that Hype and will not be able to have all of the Hype, there'll be some type of like bridging finance where it's like, look, we will rent you the Hype for this particular for an amount. It becomes a business, and then for a fee, you're able to kind of launch and participate. That would be my thinking, but let's see how that develops.
One thing, yes, Cabal, Hype D, awesome. Love to see it. This is just another way to generate yield for Hype D holders, which is bullish for me and my bags. And then the math on the other side, like if someone were to do this as a service permissionlessly on like their Hyper EVM or whatever, just like independent of this, the question becomes, can the trader with the fee reduction generate more value than the cost to rent out the Hype to the person? So like I would have a gajillion Hype. I would say, bro, give me 5%. I'll just rent this to you. So you get a fee reduction on your trading, like whatever the maker taker is. And then if that trader thinks that they can generate more than that 5%, their profit is the margin, right? It's like, that's the game. Do it as a service.
Indeed. That would be the thinking. Okay. Ledge, do you have a take on this? You've been, I don't know, chilling, drinking some water, probably. Any take before I just touch on the final headline?
No, let's get to the final headline. We are already pretty late today.
Okay. Final headline. I'm just going to give you the quick information that you need to know here rather than take ages over it. The final headline is that the co-founder of Tether launched a token called STBL. I'm guessing it stands for stable. It lets users spend stablecoins while still earning yield on their collateral. It ran up 500% overnight after its launch to 1.7 bill FDV. The quick kind of TLDR on it, this was broken down by Cointelegraph, was that there's a dual asset model. So there's USST, which is a spendable stablecoin, and there's YLD, which is a token that captures the yield from the collateral. This design separates the stable value from the yield, ideally expanding how stablecoins can be used. So the collateral is backed by tokenized RWA from institutions like Franklin, Templeton, and Ondo. And basically they're just trying to combine some traditional assets with DeFi mechanics. They're trying to unlock that liquidity while preserving the returns. So the thing that intrigued me was that this is one of the former founders from Tether. I actually don't know this person's history in detail. His name is Reeve Collins. There was a few videos that he shared on his account of him like talking through this protocol, who was talking about Tether being, stablecoin V1, and this being stablecoin V2, where you get to separate the dollar itself from the yield on top of it. Ledge, any thoughts here before we close out? Is that something interesting to you? Stablecoin chains, stablecoins in general, obviously big talk about them in general. Any final thoughts?
Obviously, stablecoin industry is super interesting, but this concept in particular, I understand it's more as a cosmetic thing to do because you already have like yield bearing stable coins, but I guess that's not something nice to look at if you have one Aave wrapped USDC that you then exchange for one USDC 3 years later, and then you get 1.24 USDC for that. That's probably a bit harder to conceptualize if a token is yield bearing and its exchange rate to its underlying asset as an extension of that changes basically every second as it accrues more and more interest. So maybe the nice and more digestible concept is to separate that into this dual token mechanism, but I'm like not too excited about it.
Fair. I feel like it's one of the things where if you caught it at the right time and you found out it was the co-founder of Tether, you'd probably press buy potentially. But this is one that I feel, at least people in my circles, was not on people's radar. So thought I'd bring it to people's attention. Now they know what it is. I have no particular position in it otherwise. So that's that. We ran over a little bit today. Hope it was a good show and worth the extension. Thank you to my co-host, Legendary and Bread, for co-hosting with me as always. Thank you to everyone for joining us. We do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X Video, YouTube, and you can catch us on Apple and Spotify podcasts if you prefer to catch up in that way. We will be back with you same time, same place tomorrow. We hope you have a wonderful day. Take care, and I hope FOMC goes well. Have a good one. Bye-bye.